TRON broke its downtrend line, and the bigger test is whether $826.9 million in Q1 revenue can support the move. The network is holding a post-breakout structure, while TRX trades above the 30-cent zone. The revenue figure matters because it is tied to stablecoin transfers, transaction volume, and decentralized application activity. That gives the setup more substance than a purely social rally, but it still does not guarantee the next price move. That tension makes the setup more useful than a simple bullish label, because the network has evidence of usage while the chart still has levels to prove. The chart shifted after a double bottom formed near 27 cents to 28 cents. A double bottom means sellers pushed price down twice, but failed to break the same demand area. After that, TRX broke above descending resistance, which showed selling pressure had weakened. Since the breakout, price has been forming higher lows above 30 cents to 31 cents. Higher lows mean buyers are stepping in at higher prices, which can signal controlled accumulation. The higher low pattern is useful only while buyers keep defending the base. If that behavior stops, the breakout loses its structure. The revenue backdrop is the reason this is more than a chart-only story. The network generated about $826.9 million in Q1 2026 revenue, with activity driven by stablecoin transfers, transaction volume, and decentralized apps. Development activity stayed stable, while social dominance cooled. That combination suggests real usage with less speculative noise. TRON can benefit from that setup only if price keeps respecting the breakout zone. Stablecoin transfer activity matters because it points to recurring network use rather than one-off speculation around a single app. The upside line is clear. Immediate resistance sits around 34 cents to 35 cents. A sustained move above that area could bring attention to 38 cents, the next major supply zone. A supply zone is where sellers may become more active because previous holders or traders see that area as a place to exit. The downside line is just as important. A break below 30 cents would weaken the bullish structure and show that buyers lost control of the base after the breakout. A break above resistance needs to hold because a quick rejection would show sellers still control the next supply area. The risk is treating revenue as a price guarantee. Strong network income can support the narrative, but price still depends on liquidity, market conditions, and whether buyers keep defending support. A low-hype, high-utility environment can be constructive, yet resistance still has to be cleared. The clean read is not that revenue automatically sends TRX higher. It is that usage gives the chart a stronger reason to hold if buyers keep showing up. That distinction matters for risk. Fundamentals can explain why buyers care, but support and resistance show whether they are still acting on it. This is also why social dominance cooling can be useful context. It suggests the revenue story is not being driven only by loud short-term chatter. The next TRON signal is whether TRX holds 30 cents to 31 cents and breaks 35 cents with follow-through. If that happens, the 38-cent supply zone becomes the next test. If 30 cents fails, the breakout loses strength, and the Q1 revenue story becomes less useful for near-term momentum. The practical takeaway is support first, resistance second, and revenue as context rather than a promise. That gives viewers a clean sequence to follow without pretending revenue alone decides the outcome. The cleanest version of the setup would show TRX holding support quietly before challenging resistance, because controlled structure fits the lower hype usage story better than a sudden spike. A stronger close above resistance would make the usage story easier to connect with market behavior.